This is the Tactical Scalper. We're going to be discussing a deep dive into the 4 EMA strategy. We're going to discuss why it's so extremely powerful and extremely accurate. We're going to show you some proper entry signals, where to take profit, where to take your stop loss, how to set up your chart properly, when to trade it, when not to trade it, and also some cons. There are some negatives with this strategy that you need to be aware of. But without further ado, where should we start? At the beginning, the 4 EMA strategy is a strategy that is based upon trend and momentum. It is a scalping strategy, which means you're looking for small moves. The reason it is so powerful is because it takes advantage of an already trending market. You know, if you trade with the trend, you're more than likely going to win those trades. And then if you add in the powerful EMAs that it pulls back up against, your win rate will skyrocket to 60 to 70% easy. As long as you have a proper risk-reward ratio, which we'll also discuss, you will absolutely crush it with this strategy. It's just so powerful and so accurate in trending markets. It's almost unbelievable. So let's start here. This is a 1-minute chart. What you're looking for is a trending market. In this case, as you see, we have a downtrend. We have 4 EMAs. And notice how they're at an angle and they're pointed down towards a downtrend. That's when you know you're going to make some money. The 4 EMAs are in the purple line, the 200. The red is the 100. The green is the 50. And the white line is the 20 EMA. Now, let's look at some proper signals and when to get in to this strategy. So let's look at this first trade here. This first trade here is absolutely set up perfectly. What we're looking for is for the market to start a trend and then pull back, and we'll take advantage of the opportunity to buy this at a lower price and then sell it for a higher price. So here on the 20 EMA, you notice where the arrow is. That is called a hold candle. The candle next to it on the left, which is also red, is called a touch candle. So what happens is the market pulls back into different EMAs throughout the day when there is a trend. And we're waiting for a candle to touch an EMA and not go really below it. That shows, well, in this case, or above it, that shows that there is strength there at that moving average. Now, we want confirmation. We don't really want to enter just on a touch candle. We want confirmation. So the next thing we look for is a hold candle. And ideally, you would want this hold candle below the EMA, as you see here. Yes, the wick barely got above it, but that is still a hold. That is where you enter. Now, where on this candle do you enter is always the conundrum, okay? And it's always a hard place to figure out on this candle because there is no set place. You can't say halfway through, all the way up, all the way down, because the candle is moving and it's moving in real time. So once you get the touch, you wait for the next candle and you will see if it will hold the EMA. I typically do not wait until the candle closes. Sometimes I do if it's a smaller candle. But as you can see, this candle started pushing downwards. And as soon as I notice that I think it's going to hold this EMA and it's pulling away from the EMA, that's when I enter. And then I put a stop loss behind the EMA. So if it crosses the EMA, I would be done with this trade, because the whole idea of this trade here is to use a single estimated moving average, because the market could pull back into other moving averages, and you don't want to hold that long. You can always cut and reposition. So as you see here, we have a perfect touch, a hold, and we enter. Now, what kind of profit target are you looking for? I really aim for a 1 to 2. So if I have a 6-8 cent stop loss, I'm looking for 12 to 16 on the upside. If I have a 10-cent stop loss, I'm looking for 20. Is that guaranteed? No. And in scalping, you can't just every time put a 10-cent stop loss, 20%, 20, cent gain. It doesn't work that way. Sometimes you have to take your profits early. However, I would really caution you taking your profits too early, because one loss will wipe many early profit taking out. So I would at least look for a 1 to 1. So that way your risk reward stays fantastic. Let's go ahead and look at another entry here. Okay, so if you notice this entry here, we have a candle. You see the first arrow? That is really not a hold, because it's crossing the EMA. We're not counting that one, as a touch. We're not counting that one as a touch. We're waiting for the next one. Now, do you see we have a touch right there? There's a green candle. We're not even looking at that one. We're going to the next candle on the right. That is a touch. You see how it touches the EMA. Now look at the next candle where the other arrow is. That is a hold. It is below the EMA. It is holding the EMA right there. That means we have support and we are ready to go. And again, set your risk reward appropriately. Here's another example. We have another touch. Do you see the two green dojis right there? They are touching the EMA. Yes, the one touch went a little above it. That's okay. The second candle gives us confirmation of a hold. We would enter on that candle. Notice again how it is below the EMA. These are all A+ setups that we've went through. This is an A+ setup. We have a perfect touch, a perfect hold, and we are set. And if we zoom out, you see we're still in a downtrend. We are going short on these plays. Let's look at a couple others. Now, look at this one. We have a green bar that comes up and touches it. We have another hold. The third bar where you see the arrow, that is a confirmation candle. That really proves that it's been held. And you could also enter there. I would not enter past the confirmation candle, because then your risk and reward gets really screwed up. So if you have to, you can enter on the third confirmation candle. However, I would highly recommend aiming to get in on the second candle. Now, sometimes this happens. Sometimes the price doesn't exactly touch the EMA. Sometimes it doesn't hold exactly right up against the EMA. That does happen. In these instances, if it remains flat like this with a touch and then you see a bar going lower, that could be a touch and a hold, even though it's not right up against the moving average. This is probably a B setup. This is not an A+ setup. Again, as you see, we're still in a great downtrend, and it's easy to take these trades and not lose. Now, we have some things going on here. As you see, the trend is changing. And when you see the EMA start getting crossed, it's time to be cautious. And yes, you can take trades. You can still go short because look, we're still in a downtrending market. Although these are starting to flatten out, you could still take trades if you have any touches and holds. But as you see here, we don't have any. They break through the EMAs. They don't really touch it and they don't hold it. These are no trade zones. The EMAs must be respected for this strategy to work. Okay, let's look at a couple more examples. That is not them. We will scroll through here. Perfect. Zoom out. Look at this choppy market. This is a really hard time to trade the 4 EMA strategy. However, when you're in a market, you don't know it's choppy sometimes. So look at this. Downtrending market. What do we have here? A touch. It almost got there, and then a hold. Like I said earlier, this is a B setup because we're not on the EMAs. We're just below it, but the risk reward is still good to go short because we are in a downtrend. Look at this setup. This is an A+ setup. We have a touch. You see the right there. We have a red hammer candle that touches and goes through. We have another green candle. Then we have another hold. Look at that. And then you have a confirmation candle. If you could, you would want to get in on the hold candle and not the confirmation candle. But sometimes you don't have a choice. Sometimes this will happen to you as you're trading the 4 EMA strategy. You will come up, you'll have a perfect touch, beautiful hold, and the market will go against you and you'll get stopped out as you see there on that second arrow. The strategy is not foolproof, as there is no such thing as a foolproof strategy. However, this strategy does produce a 60 to 70% win rate continually. I highly recommend you give this strategy a try. Now, here are some cons of the strategy. As you said, it's not perfect at all. Okay? Some cons of the strategy. You're looking for base hits. What I mean by that is you're looking for small wins. And that's another reason a strategy is just so effective, is because we're looking for small movements in the market, going in with heavy contracts or lots of shares and taking advantage of small term price movement with limited risk. So the cons, you're really not going to get massive home run moves. You're not going to get $1, $2, $3 moves like you would get on a swing trade. That's just not going to happen if you are trading this strategy effectively. Also, another negative is there are times you just cannot trade the strategy. If the market is flat and the EMAs are not trending, you cannot trade this strategy. Look at this. See all these EMAs? We're flat, we're tangled, we're arching different directions. You do not trade this period with this strategy. If you do, you will lose because a strategy is horrible in choppy markets. It will not work. I'm telling you. Do not trade this in a choppy market. Here's some other examples of trades we have taken. Look at this. This is an upside trend now. Look at the trend. We're moving up. It's a beautiful uptrend. We're going long on this position. We have a touch, see there with the green doji, and then the green bar there. We would go in there as the hold for a long position. But oftentimes in trading, you will get stopped out. That's why you must have a tight stop loss. So that way when you do lose, because you have lots of contracts or lots of shares, the loss is minimal. Look at this one. Beautiful touch. Nice hold. The wicks do go a little below, but you would get in on the first or second candle here, because look at the proof it's given you. There's another touch. There's a hold. There's a touch. Touch and hold. Then the third candle would be your confirmation candle there as a hold. That would be your confirmation. You would be in there. That would be a great trade with this one. All right. This is a Tactical Scalper out. I hope I helped you out with this video, guys.